Hello friends, this is Martin from Secret, the channel for learning about trading and investing. Welcome to daily market technical analysis show. Markets tomorrow. So we are looking at Jan 11, Tuesday 2022 tomorrow. So what we do is we look at all of these parameters. It's pre-market analysis for tomorrow based on what you see on the left side. We look at all of those in the charts. We will additionally have analysis on all those parameters that you see on the right side as well, and then grab some actionables, right? So what was the day today? It was like, we recaptured, we in the sense the market recaptured 18,000 back, right? And the bull rallies ahead is what we can understand. Let's get into the charts and see what exactly happened, right? So what you see there is, it's a wide range bullish candle, right? We talked about a previous resistance which is acting as a support and then bouncing up. We saw that, right? The retracement happened at the support level and then it bounced up, and today it was further confirmed with a wide range bullish candle. So that is what is change in polarity bounce is reconfirmed with a wide range on the Nifty as well as on the Bank Nifty. Retracement was seen here also, not fully, but it was also a previous resistance zone. It took the support and then bounced up, further confirmed today with another wide range candle. How big is that? 1% up, 191 points on the Nifty and 1.6600 points up on the Bank Nifty, right? And both was gap up morning gap up, intraday gap up is what you see here. This is what happened, right? It's a 0.5% gap up, and then there was a retracement at 11 to 12, and then further it was trending upside, breaking the 18,000 and much beyond. And Nifty also, right, 0.5% gap up, and then some retracement in between, and then trended upwards towards, right? So it was the the high that it made today at 38, near to 38,350 kind of levels, right? So volatility expansion, if you see, this is what you see, volatility Bollinger Bands are showing that there is expansion on the both sides. Here also it's upside, and so the volatility is expanding on both the sides with price moving and walking on the bands, which is a bullish signal, walking on the bands, right? The price is moving along with the upper band upward. So it's clear bullishness that is the Bollinger Bands indicates upward resistance levels. If you see 7950, 18,000 is where it is at right now. It's kind of resistance and support, you can say. It's already closed above that, but still there could be some resistance there to retain that. We'll have to see that tomorrow. Above that, you have 18,100 and 18,200 above that, and then 18,350 to 18,400 upsides. Resistances and downside support would be 17,800 and 17,850 once. And after that, 17,500, 17,600 is Fibonacci 23 level. After that, you have 17,350 to 17,400 levels. Similarly, on the Bank right side, you can see that it's hit a resistance zone of 38,350 to 38,500 levels, and then above that, now the resistance will be far away, like 38,900 to 39,000, 39,100, that range, and above that 39,300 to 39,500 range. Downside, the first slip fallback maybe 38,000 level, and then after that 37,700 to 37,800, and after that 37,300 to 37,400 Fibonacci 23 level. So that would be where the supports and resistance for the Bank Nifties. Momentum divergence. See, momentum, if you see, it is clearly on the bullish zones. Momentum has taken a range shift from the sideways and it is bounced up. Perfect. Similarly, it is not taken a range shift, but it is taken a retracement and bounced. Momentum is bullish. Momentum is bullish. Clearly bullish. Right? And there was a 15 bar divergence which has met the target. We already know that. Here we have 15 bar bullish divergence which has met the targets, and now there is something that you have to just keep in mind. On the Nifty, there is a bearish divergence that is not confirmed. It will be confirmed in case it is falling back. Momentum is falling back towards the 40 again. Then you can say that, right? But you never know that it will work or not. But something to keep in mind that there is a potential unconfirmed bearish divergence on the Nifty short term. Both are daily time frames that we're talking about. Trend indicators are bullish clearly, and you can see that the strength of the DMI positive is rising up. Strength is rising up on the Bank Nifty also. Medium also it's bullish. So trend is bullish, momentum is bullish, price action is bullish, Bollinger Bands is bullish. Volatility, it is flat today. 76.67 is 0.5% up. That's all flat day. but you can see that it is kind of at somewhere above the middle of the range of the 15-20, right? So anything about 20 you have to be careful. So since it is at the, it's not exactly the top, but there is a chance that it can dip, it can fall to the 15 is quite far from here, 15 levels, right? So that can be expected in coming days, or it could you know rise up towards the range high of the 20, right? Either of that can happen, right? Open interest analysis is showing that the highest put trading is here at 17,500, after that 17,800. Resistance at 18,000 is still there, and 18,500 also having good amount of resistance. So why 18,000 still has resistance even after closing about this is something you have to keep in mind. That may be taken away tomorrow. So long build up is what happened today. 1.2 is clearly bullish on the PCR. Bank Nifty 38,000 and 37,000 and 39. Those two levels are where the put writing support is there. Resistance seen at 39,000 is quite far, and 38,500 also has good resistance. That's somewhere near to where it is right now. So that has to be taken out first. 1.12 is bullish on the put call ratio on Bank Nifty. Long build up is what happened in the futures of interest also for Bank Nifty. So that's summary of the open analysis. Correlate this to the levels that we're seeing on the price, and then you'll get to understand, right? One thing to notice, 18,000 still has a resistance, but the market is already closed above the 18,000. So whether it will be able to sustain or not tomorrow, but still you have expiry many days ahead of the expiry. So 18,500 maybe where we may end up to have real resistance, and 18,000, 17,800 maybe a good support, end up as a good. 17,500 is already far, very far away, 500 points down. So 17,800 and 18,500 may be the range that we may have for this expiry weekly of the Jan 13th, right? So that's about the open list letter. Yeah, heat map you see, like, it's all good green with HDFC, ICICI, Kotak, and IT stocks also doing good. CFG Bank also turned green, Reliance also little green. So overall, no, there's the only IT Wipro has gone to red for some reason because of results that is upcoming, and 2 days later, probably related to that. Anyway, so the heat map is clearly bullish day. Sectoral performance of the IT is close flat, no, but green. Short-term momentum has slipped to the sideways, so we'll have to wait. Metal kind of flat green, you can say. Momentum is sideways, we'll have to wait. Auto 2% up, so that's the only sector that is bullish. Auto with momentum of short-term and mid-term both almost in the bullish zone. So either you can pick up the stocks in the auto right away, or you can wait for some more for the weekly also to confirm the bullishness, right? So auto sector is bullish. Pharma is flat and sideways momentum, so we'll have to wait. FMCG also flat and momentum also sideways. Reality short up, but it is momentum, short-term momentum is still flat sideways, so we'll have to wait. So yeah, so what is only sector right now? After that, IT. So these are two sectors that is close to the bullishness with the momentum. Institutional participation data is not coming today, but as per yesterday's data, you can see that there is a pause that has happened on institutional selling. The previous day, Friday also, 7 January, it was buying that happened, and only one day of selling has happened in January by the Fyers, that is on 6th, that is following some Fed meeting minutes. But otherwise, the Fyers selling has stopped in the January is what is positive thing that you can read out from the institutional participation data. Dollar index is consolidating, and then it is hovering around this range. But today was kind of a dollar strengthening that happened in the dollar index. But put USD INR currency pair trading, if you see, it is falling. Rupee strengthening. And it is fallen off the major support, right? Whether it will fall away from this channel support is something you'll have to see today. So it is at 74 levels, back from a few weeks before it was 76.5 and heading to 77.2, and right now, just in few weeks it has fallen back 4 rupees down, nearly 4 rupees. This is a big fall, and rupee has clearly gained strength that you can see here. But dollar index has broken out of the major two resistance areas and then consolidating before a further breakout. It could be possible. That's about the dollar index, not the currency pair trading. crude oil is shot up above 75 kind of levels, and 76, 78 kind of levels is what you see in the other 2 days. Today it is kind of consolidating, but it is still above major resistance zone. It's at high level, so it is to gain momentum, and it is range shift into the bullish momentum zone. So which is not good that crude is gaining strength in the price in the moment, right? So gold is still at the same place where it has been there since almost more than a year or so, and it tries to move up, and then we have a resistance near 18,000, and then it falls back, and then again attempts. Today was a green day more or less for the gold. Global markets, US markets especially, is not was able to be opening now only, right? It was not there today. So this data that you see is, but otherwise, if you see the the all the US markets, Dow Jones, S&P, and Nasdaq, all of them is red last week, and we'll have to wait and see that tomorrow morning pre-market to see how it is reflecting the SGX, and how if there is any big move that can come again, which, if that is the case, would reflect on our markets and SGX also, right? This is something you need to watch pre-market tomorrow. Examples 2, Demat Nitrate is one, and National Aluminum is another one. Demat Nitrate was trending up, and then there was consolidation, and then broke down suddenly, and then it had done a very good correction, and now there is inverse head and shoulder pattern just broke out from the resistance neckline. That seems to be trending upside, and then there is enough scope for it to go and hit back 3000 again. So there is a potential. Volumes are good, momentum is good, trend is good, price pattern also good. So they book nitrate for a swing or positional trade. National Aluminum, there is a ascending, expanding wedge, which can give good results. It is broken out of a major resistance zone, and it can give a good price movement towards the wedge channel top. That's quite till 130 kind of level. So 125, 130 kind of levels it can move up for a swing position. It's a good volume, good price pattern, good momentum, good trend. So National Aluminum. It also gives good dividends as well if you're a long-term player, right? Just for information. So the wrap up, moderate bullishness is what my view on the market is. Reason is the support and resistance level, the bullish momentum and the bullish trend, and especially the pause and the institutional selling is another reason, right? So Nifty and the Bank Nifty both have recovered 10% and 13% respectively nearby. So it is both have gained momentum and crossed over the trends, and so it's clear bullishness that you can see in both this. So there's no other way other than being bullish about markets. Weeks has gone flat today, but it's still in the higher end of the 15-21 range. So it could move either ways. You don't know where it is reverting, but it was heading up since last several days. So it's at 17.5 kind of level. It's high volatile environment, but anything above 20, you have to be cautious. Cautious position sizing has been done because of some pandemic related news and Fed tapering news and all that is there, but it can make the market keep it, and so position sizing has to be very cautious. Intraday directional trades can work out because the market is trending, so but it may not work out all the days in a week. It may be taking a breather in between. So which is a trending day, which is a consolidation, is something that we'll have to detect or identify in the morning itself. We are doing intraday. And option trades with calendar and vertical spreads, as I always say, will help you from having a reversal pain, and where the risk will be defined in case it goes against you. Your view gets damaged, then you will not lose much if you're going for option strategies of vertical spread, calendar spreads, or full defined risk strategies like hand founder and hand fly and all this. So wrap up is a moderate bullishness, as I said. So that's my view, and I hope this helps you to form your view and your trade plan for tomorrow. If it helps you in any way, consider hitting the like button and share it to your friends so that we have more substance. We have very few substance, I hope, and seek your help on in this regard. Okay, thank you so much for watching. Happy trading, happy learning. Bye.